Dave,
Yes.
what are you doing in China?
What am I
Aren't
doing
you
in China?
supposed to be in Silicon Valley?
No, not really.
Really? Okay.
uh,
Or somewhere
Doing
else around
talks,
the
doing some
world?
fundraising, meeting with our team, and I don't know, just enjoying the excellent weather in Beijing, which is
Yeah,
pretty awesome.
yeah. We've
I,
got.
I heard there was a pollution problem, but I'm not seeing it.
It depends on which way the wind's blowing, right? So
Indeed.
yeah, it's been three. I arrived on Monday afternoon. It's been three. Is today the third day? I think. So
For
third
me,
day.
just
Today's
24 hours, but
Wednesday.
yeah, it's good.
Oh, okay. So it's been good. And I was in Beijing just a few weeks ago, and it was blue sky half the time I was here. So
I try to make it here about at least once a year and see what's happening.
oh, well, good, good. So have you seen? Um, what's your view on China? Have you seen progress here? I mean, or what?
I am
How from your
probably
Silicon
not the expert. You
Valley?
should probably ask Jenny what's going on in China.
Yeah, Jenny Lee is
Or
here from GGB,
yeah, I
um,
guess Edith
and
and
Edith
Charlotte
is
and
here,
other
and
folks on our
Charlotte.
team.
Yep.
And Bonnie just joined us in Hong Kong recently.
Okay.
So they're more the experts, but I come here to learn. So I'm not going to say I know exactly what's happening. But I will say I find it challenging given valuations in this market.
Uh huh.
Probably would want to be very careful about what's the
Sure.
areas we're putting money into.
Sure. Okay. Well, how many investments has 500 startups done so far in China?
Roughly about 20, although some of those are in Taipei and Hong Kong. So probably about, I don't know, 10 to 12, 10 or 15 in the Beijing area. Beijing, Shanghai,
That
Shenzhen areas.
sounds like a lot, but you have a
For
huge
us, that's not
portfolio,
very
right?
much at all.
Oh, that's
Yeah.
what I was going to
We've
say.
probably done 600 investments outside the US. We've
Hmm.
probably done over 200 in Asia. But I will say China's the one of the few places I'm not always sure that I know exactly how we're going to make money. Feels a little bit late 90s US to me around here sometimes.
That's scary.
Yeah, it is very scary.
So, where were you in the late 90s in
Where
Silicon
was I in
Valley?
the late 90s?
Yes.
I was actually doing some consulting work for a bunch of companies. So we were selling picks and shovels. Uh, did a little bit of work for Netscape and, um, well, saw the whole boom bust. I think between 95, 96, and maybe 2000, 2001 was definitely the bookends. I remember distinctly, I was in the lobby of Netscape the day that they went public, and Jim Clark was kind of walking down the circular staircase about a $500 million richer that morning, which was pretty wild. And then probably 5 years later, I was listening to Jeff Yang do a talk at Stanford. I think it was probably March 2000, and the stock market had dropped about 30%, but he was already projecting they had lost 70 to 80% of their portfolio, which was like kind of stark. So that was kind of the 5 year period, which I would say was pretty much insanity in Silicon Valley. And a lot of people did make money, but a lot of people lost a lot of money also. You had, Google, eBay, Amazon, several other, companies, but a lot of other stuff that probably nobody has heard of that people have forgotten by now. So definitely some very, very large wins and great companies, but a lot of crap that probably was around that. Which, I think that's the general story. 90% of everything is crap, but in high valuation environments, I think you probably want to stay away from the overvalued stuff that isn't likely to be around for the long term.
Yeah. So, this is the comparable to China right now.
Well, I mean, I'm not the expert, but I would say some of the multiples in the Chinese stock market, some of the valuations here do not feel terribly sustainable.
Mm.
Again, I had a conversation with Jenny about this maybe about 6 months ago, and she was convincing me that the market was so large that the opportunities would offset the overvaluation. But I don't know. I don't do as much investing here as she does, so I'll let her be the expert on that.
So, what do you see in China that interests you in terms of technologies? Where do you think China has an edge?
Well, probably a lot of areas. Just general level of entrepreneurship and competition is pretty amazing here. I would say probably more intense than Silicon Valley in a lot of ways.
Mm, yeah.
Certainly in gaming, WeChat payments. I think people often say that China's copying other places. I think these days the U.S. is copying China, Facebook in particular. Uh, But and then probably online video entertainment also.
Yeah. Okay.
Sometimes I think China copies the wrong things. Like I think everybody's like super crazy about AI, and I'm not sure if that's really an investment category. Like there's nothing wrong with hiring smart people, but AI is not a business model.
Okay.
Voice recognition, visual recognition systems, pattern recognition applied to solving problems. Yeah, I think there are definitely lots of opportunities there, but I think there's way too much enthusiasm and insanity for just anything that has AI in it. Anything with two letters in it. AI, AR, VR. Anything with
Stay
two
away
letters, just
from.
like, whoa, that's really sexy. Uh, but there are going to be wins in those categories too, I'm sure.
Okay. What about the autonomous, the self-driving car? What's your view on that? And particularly here in China.
Again, really big opportunity and big business, but just tons of dead bodies along the way and lots of capital. And, not going to be as many winners as many dead bodies, I think.
Yeah.
So that we'll see.
So
Going to put a lot of people out of business, out of jobs, I guess I should say.
yeah.
So.
Yeah. So what fields of technology are interesting to you right now that you have on your radar as interesting areas in which to invest?
It's really unsexy shit that people don't care about, like stuff that makes money. E-commerce, wow, how unsexy. SaaS, yeah. Marketplaces, fintech, education, healthcare, real estate tech, jobs and recruiting. Shit that makes money that's been around for 10 or 20 years or hundreds of years in many cases. I think there's like two different categories. There's breakthrough innovation, which typically is high risk, often very capital intensive, not clear business model, not clear market always. Definitely in AR and VR, there's going to be really big companies and big winners, but I don't know that there's really a market that has even 10 million users right now, or platform, I guess I should say. And if it is, it's probably in gaming or porn, maybe in real estate. Porn feels monetizable. I'm pretty sure that will make money. Gaming feels monetizable, and lots of, I don't know, Minecraft, I guess you would say, is a very limited AR environment of sorts, and my kids definitely have spent a lot of time there. But in terms of a commercially viable platform right now, I think they're still being baked. A lot of stuff that we look at is really just taking existing business models, using a little bit of technology, perhaps a lot of online marketing, and doing those in new and different ways in different geographies. A lot of our investment strategy is taking things that we know work in Silicon Valley and China and taking them on the road to Southeast Asia, South Asia, Middle East, Africa, other places, Latin America, where there aren't as many competitors. Lack of funding is a challenge sometimes as well, but definitely, I don't know. I feel like right now, Pakistan, Iran, and Nigeria are probably really interesting places to do really boring, unsexy businesses that'll make a lot of money.
Yeah.
And there's not that many people doing investments in those places.
Sure. Well, I know 500 startups has gone almost around the world now. You have a flag
sparingly.
In
we have
many countries.
One or two people in 100 million person countries or more. But yeah, probably about a third of the team. There's about 150 people now. About a third of the team is probably spread across 20 different countries, investing in about 50 or 60 countries.
And how many different funds do you have now?
Hard to count, but let's say four main funds that are global that we've raised, probably 70-30 US global focus, and then 10 roughly regional and vertical funds with a few more on the way. We just opened up Vietnam last week, and we're about to launch the Middle East fund. And a few of those are on second iteration. So we're raising second funds for Southeast Asia and second fund for Latin America, Mexico.
In Southeast Asia, what do you see as the most promising market?
Geographically?
Yeah.
There's a lot of stuff that's happening out of Singapore and Malaysia. Indonesia is probably the largest market, but some of those companies are being incorporated in Singapore. So you have, folks that are doing business out of Singapore, but primary market's really still Indonesia or others. Thailand, we've done a lot of investments now just in the last year and a half, probably 25 or 30. That's going really well. Philippines and Vietnam are still early, but promising over the longer term. And then we've dabbled in a few other places. I think we did our first investment in Myanmar. We've done one in Bangladesh. Those are kind of pretty edgy, scary, but they'll come along.
Wow.
If we make 50 to 100 investments, we'll find 3 to 5 things that work.
Wow. So how do you balance the kind of
There is
investing that
no
you're doing?
balance.
No balance. Okay. Totally imbalanced then.
I don't know. People who say that they have balance and are, doing startups or VC, I'm not sure. Maybe VCs there's a little bit of balance, but not really outright, especially in China.
Like for the frontier type investments, what percentage of the time does it occupy, and
For us?
resources does it occupy?
Edith's looking at
frontier
that
stuff.
a little bit more.
A little bit more?
I would say
Yeah.
for us, it's probably 80% old tech that's incremental innovation, 20% breakthrough stuff. But, we're starting to look at it more. I'm not saying those are bad investments or just like, we usually want to see platforms that are 100 million users or more before we start putting a lot of money into things. We're not usually finding the next Snapchat or the next Facebook. We want to see the things that run on top of the next, Facebook or Snapchat or Google or whatever. So looking at messaging platforms as distribution channels for customers is pretty interesting. Now WeChat as well as, Facebook Messenger and Instagram and others, picture-based platforms and kind of, pictures, video, AR, VR is sort of the progression. So things that you see visually and just extra enhancement on that as things go forward. It's kind of like really basic. Faces are still kind of important. And so, but I think people immediately jump to the really sexy technology, and there's still a lot of investment opportunity in picture and video based platforms. And I don't think as many people look at that as direct marketing. They look at that as kind of advertising based models. And I think, particularly in the US, I would say YouTube is still stuck in CPM-based advertising models and monetization models when they really could be doing direct marketing. And there's, maybe just too many old advertising execs that Google hired for YouTube instead of people like we are investor in a company called Ipsy, and they're doing, I don't know, $150, $200 million profitable, but hardly any, actual spending on paid acquisition. Most of it's organic. And I think that's really interesting. Probably a lot of that's happening here in China through online video models also. So again, maybe China's leading the way on some things.
So how do you find your deals, and how often does 500 Startups lead them or co-invest? What kind of?
We do everything and anything under the sun. We do online education. We do offline events and community. We do recruiting in California, in the U.S., all around the world.
Yeah.
I don't know.
But do you lead?
Every possible channel we can think of.
Okay. Do you lead? How many? What percentage of these investments do 500 Startups actually lead?
So probably the breakdown of our investments, I would say, is about 40% through our accelerator programs, another 10% through customer acquisition, growth marketing programs, another 30 to 40% that we do through co-investment with our micro funds, and then 10% that I can't add very well. But we do some investments in other funds, not a lot of that, but some of that. But last 2 years, probably 400 to 500 first check investments. Wow. And hopefully we get at least 100 of those to Series A.
Wow.
And
so this
these days, I would say a lot of stuff comes to us. We still have to go search for it, but we probably pick a category that's not hardware or biotech, and we've probably done more than 100 deals in most categories at this point.
So at some point, does it become just too big to manage all of this stuff that's going on? The geographic expansion, the different funds, the looking for new things? No?
No, I don't know. This is like the this crazy thing about venture capital is we're supposed to be in the business of scaling companies, but there's not very many large VC firms.
Right.
And we're already at 150, one of the largest VC funds. I mean, not necessarily in terms of dollars. But I find it curious that people don't seem to blink at, startups that might be 500 to 5,000 people doesn't seem to phase anyone. That's kind of like, successful, but not at all crazy. But there's probably less than 10 VC firms that are more than 100 people. So it just seems like, we should be better at scaling our own profession.
Yeah. How do you manage your own time?
I'm terrible at time management. I spend way too much time on social media just fucking around. These days I would say I'm, Christine and my co-founder Christine and I, when we were first starting, it was really about 5 or 6 of us, and she and I were doing most of the investments. So we were doing easily 40 or 50 deals a year each, probably more than that at times. Last year I did 10 deals. This year my goal is to do 5 or less. But so I think both of us are kind of running different pieces of the organization, not doing as many investments. We have 40 or 50 other people on the team who are doing deals now. My focus has probably been more on trying to figure out how do we get the microfund structures off the ground. So we're still, entrepreneur facing and primarily doing a lot of investing, but starting to move into how do we become a funding platform for VCs and scale that piece of it.
How does a startup get into one of your accelerator programs?
Be amazing, I guess. I don't know. We have a lot of folks that are doing outreach. We get probably, I don't know, 2,000 or 3,000 applications a quarter. We cut that down to about 200 or so that we interview, usually in person or Skype or something online, and then we do 40 to 50 offers per quarter. Probably get a 90 to 95% acceptance rate on that. So, I mean, mostly it's just reaching out to other people in the network that we know, usually other founders or people on our team in a specific vertical area. But a lot of it is through the network of people that we've done deals with in the past.
And what's the biggest home run that 500 Startups has had?
So far, well, start to finish probably will change, but Credit Karma, Twilio, and Grab are probably our highest valuation companies. I don't know if they're our highest multiple companies. Twilio had an IPO last summer. I did the original investment. I was still at Founders Fund. But yeah, I think some of our accelerator companies, which are now 4 or 5 years old, are valued in the several hundred million. So probably on a multiple basis, those will do better for us. I don't know. It takes a long time. I think, we're just 7 years in. We're just starting to see some bigger wins now. But I don't know.
So what's the number one thing that you've learned after all these years of being a venture capitalist? And
most things I'm wrong.
Yeah.
Yeah. 90% of the time I would say we're wrong. 95%. Well, I mean, we get a positive return on investment probably 20 to 30% of the time. We get, meaningful exits at 10 to 20x about 7 to 10% of the time. We get unicorn or 50 to 100x outcomes about 2% of the time. I didn't used to think that was a possible number, but now we've seen that enough where, I think it's for us about, between 1 to 3%. So we're trying to kind of do that at scale. But yeah, still most times we're wrong. Yeah. Everybody's wrong. Most people don't admit it, but most of us are wrong. It's arguable whether entrepreneurs or VCs are worse at their craft, because probably 80% of both entrepreneurs and VCs suck.
Yeah, probably. I mean, the old adage was that only 1 out of 10 investments is going to make it. The other 9 are going to be written off.
Yeah, but so see, the VC business is a little easier because we can get lucky and look successful. Entrepreneurs don't usually be successful just on luck. They actually have to know what the fuck they're doing. But occasionally VCs look fucking smart when they're really just lucky.
So okay. So what's the number one thing that you've learned that it takes a lot of luck?
Be lucky. Be lucky.
Be lucky.
It's really important.
All right.
Well, I mean, for us, it's do a lot of investments. So I would say,
Okay.
again, not necessarily
Spray and
everybody
pray?
really appreciates the approach, but
Is it spray and pray?
I don't particularly like that term, but yes. I mean, we would
A
call it
little bit.
a quantitative approach to venture capital investing. But, you know, I don't know. If you do 50, 100x outcomes 2 to 3% of the time,
Yeah.
and another 10 to 20x outcomes 5 to 7% of the time,
Yeah.
and you do that often enough, you're going
Sure.
to do okay.
Sure. Well, Dave was on the Forbes Minus list last year.
Yeah,
So,
that's a popularity contest, but whatever.
Yeah, that's a high profile one.
Jenny, do you think that being on the Midas list is like really amazing? No. Yeah, right.
But because Jenny's been on it, that wasn't her first time. So,
Indeed.
but anyhow,
Well, it's probably more impressive because she's well, anyway. One
okay.
of 5 or 6 women. I'm one of like 95 guys, so she's much more impressive on a relative basis. But there should be more women on that list.
Yeah, we do have 2 of the Midas listers here tonight, so that's great.
Wow.
Okay, going forward, what are you spending your time on? The number one
Running
thing.
a startup called
Yeah.
500.
Okay.
And trying to figure out how to take that to 500 to 5,000 people and maybe go public
Wow.
someday. And
Really?
yeah. Yeah. I mean, what's fun about my job is we're an investment company, but we're also a startup.
Yeah.
And so a lot of what we're doing continues to change, like, I don't know, on a monthly basis. So looking at ways that we can build out services components to the investment, we're kind of ramping up an M&A component to the program. We've been launching like growth marketing stuff and scaling that up. So we're doing about probably 80 to 100 company investments this year. The
so
microfund stuff was like super challenging. We've got 10 funds up and running. I didn't mention the 3 to 5 that we didn't get up and running, but there's a lot of, again, dead bodies there. I don't know. The profession is, I think, very careful and cautious. And so if you're willing to take risk and you're willing to have some public failure, I think you can actually innovate quite a bit in the field of venture capital. There's not too many people who are really trying new things. I think, YC is doing some interesting stuff. First Round Capital, Andreessen, Google Ventures. Sequoia does cool stuff, but they don't tell anybody about it. But I would say, 90% of venture capital is practiced pretty much as it was practiced 30, 40, 50 years ago. Probably the really cool thing that I think we're trying to work on now is doing fund-of-fund structures for countries and trying to help them create, their own Beijing or their own Silicon Valley in places that aren't, established tech metros. A lot of people seem to focus more on the entrepreneurial side of the equation being the missing link, and I would say it's usually the investor side that's really the missing part of the equation. So, people tend to overlook 50, 60, 70 years of history in Silicon Valley and a lot of the government subsidy structures that came out of either the Defense Department or the SBA. There were billions and billions of dollars that were spent over multiple decades in the US, basically subsidizing venture capital. And we all kind of think about it as this private sector exercise, but it's highly, public in a lot of that spending that was initially going. So people are sort of like impatient that, we haven't been able to create Silicon Valley in just 10 years. Well, Silicon Valley took 50 years to get going. I'd say Beijing's probably done that in 20 years.
Right.
But a lot of other places, it's still, will take a decade or more. And, I think if you look at number of VC funds per capita, probably in the US and China, that's around maybe 1 per million, maybe 2 per million. But in most other places around the world, it's, 0.1 or less than 0.1 per million. So people often complain about too much capital chasing too many deals, and there's too much late stage capital chasing deals, but I don't think there's anywhere near enough capital funding startups, at least geographically around the world. There's a lot more to be done.
But you're actually going to move into growth stage funding, right?
I mean, for us, growth is like Series A, B, and C. So we're doing an opportunity fund that'll, invest in the top 5% of our first 3 funds. Probably 50 companies out of 1,000 that are at Series B or C. We haven't in the past done late stage bets, but we'll probably still be doing, 1 to 2 million in 20 to $50 million rounds. In general, we're not leading most rounds. We like the fact that there are other people who are taking board seats and having, a lot more hands-on. We try and be breadth oriented in what we're doing and try and get companies at least to seed stage in Series A.
Okay. I understand you were recently in Africa.
It was. We were starting to look at where we might want to. We've done about 10 deals in sub-Saharan Africa across 4 or 5 countries, but I think that's a big potential area. Probably, over the next several years, 5 to 10 years, but we might start a fund there in the next couple of years. We'll see.
I heard a little bit about your trip. It sounded really exciting, and it got me sort of thinking about Silicon Dragon in Cape Town or something next year.
Yeah, we went to Nigeria, Ghana, and South Africa, and I went to Kenya last fall on an individual trip. And, still emerging markets. Nigeria is probably 180 million people and will be a very, very large country over the next 10, 20, 40 years, but still early stage in terms of what capital is available there. But ag tech. Ag tech. Ag tech. Not ad tech.
Okay.
Ag tech.
AG.
Yeah, we saw a company was doing like Uber for tractors for farmers in Nigeria.
Oh, cool.
Definitely education, healthcare. FinTech is probably where a lot of people are starting. So payment stack and mobile money is where a lot of people are looking at. And probably lending.
Okay.
But credit score data is often missing in a lot of markets.
So from dealing with all these entrepreneurs that you've seen over the years, what's your piece of advice for entrepreneurs who are trying to scale up?
Basics. Don't get distracted by shiny objects. Focus on customers. Build shit that people want and pay for. It's kind of basic, but nothing against you people, but you're all here for probably the wrong reason. This is like celebrating entrepreneurial fame and fortune, and like it's bullshit. It's you should be sitting there fucking coding or selling or something. Like this is a waste of time listening to me.
Okay.
If you want to be a VC, I can tell you why not to be a VC, but sorry, I don't mean to be too aggressive on that, but there's a cult of. See, those people think we're not interesting. That's why they're talking.
Hello. Hey, you people on this side, do you have any questions for Dave? Anyone have a question for Dave? And let's get a microphone over to you. Okay.
To wax a little bit more poetic on that, I would say that venture capital is glorified mortgage processing. Like our job is to find smart people and give them money. That's really it. And that's not that hard. Just that we fail 80 to 90% of the time.
Since you're not the China expert, what about Silicon Valley? Do you see any threats to Silicon Valley maintaining its kind of global
threats to Silicon Valley?
Startups or venture capital? Like what's
wages,
real estate?
Silicon Valley's gonna be around for a long fucking time, and probably increasing its share of venture capital in the U.S. So I mean, overall, there's more venture capital going to other parts of the world, but that's natural because there was a lack of capital. There's a dramatic lack of capital in most parts of the world, but there's more and more capital being deployed in the U.S. I think we're actually getting better at it. Theranos and a few other issues aside, I think in general, capital is being deployed much more efficiently than it has been in the past. Everybody predicting there's this huge fucking massive crash coming. They're absolutely wrong. They're just looking for headlines. There will be failures and blow-ups, but generally speaking, the reason that all the unicorn late-stage financing stuff is happening, the reason there's less IPOs is because it's fucking working. That's why. Like, it's getting bigger and bigger, and those companies are staying private longer because there's private capital that's available at, less, bureaucracy than going public. So, a little bit of downturn in the market, you'll see more IPOs. But venture capital is the shittiest little tiny asset class on the planet. If you compare it to anything like PE or real estate, it's 100 times bigger. Like, most other people laugh at venture capital because it's just so fucking tiny and terrible performing. We're generally getting better at that. As it gets better, the asset class will grow. And there'll be ups and downs in the asset class. But the reason people are pouring shit tons of money into venture, particularly late stage venture in US and China, is generally because it's working. Facebook, Uber, LinkedIn, Baidu, Tencent, Alibaba, whatever. It's working. So it's getting bigger. There will be excesses.
Hey, Dave.
Okay, there was a question over here.
Can you hear me?
You have the mic. Okay, good.
Can you hear me?
Yeah, and it'd be great if you
Wait,
just,
maybe I'll
yeah.
pick up. Hey, investment hypothesis in e-commerce and what's the next
You have to actually hold the microphone if you have
I
it.
don't think you can hear me. Can you hear me?
Yes.
Wait, hello. Hey.
There.
investment hypothesis in e-commerce and what's the next big thing you're seeing there?
Investment hypothesis in e-commerce. So e-commerce is like a million different things. Fat margin, thin margin, holds inventory, doesn't hold inventory, support cost, not support cost. Are you competing with Amazon or, Alibaba or other people or not? I would say in general, we like niche-focused commerce with defendable margins. Hopefully not too much inventory cost, or at least the timing of revenue expense is not too long. And there's plenty of stuff to be done there, And if you want to go after really, really big stuff, then you'll be competing with, Amazon and Alibaba, and that may be dangerous. But there's tons of niche. And when I say niche, we're still talking about $100 million businesses, right? You get into $1 billion businesses, then Bezos starts paying attention and Jack starts paying attention. But below $1 billion, you can build lots and lots of variety of businesses.
Okay, those are good questions. One last question for Dave. And it'd be great if you ID yourself, please.
My name's Greg. I'm the CEO and co-founder of 24/7 Tickets. My question is actually related to what you said at the start about unsustainable business models in China. I wanted your take on the bike sharing phenomenon that is here.
The bike sharing phenomenon, yes, right. I'm seeing that all over the place. Again, I'm like 48 hours old to bike sharing, but probably a lot of people riding bikes in China. Probably going to be a hell of a lot of competition for that. Probably going to be a lot of negative cash flow margins in those businesses for a long time. Clearly something that probably makes sense. I mean, if you look at ride-sharing businesses for automobiles and then for motorcycles, bikes was probably next. You'd think that actually starts the opposite way, that we go with bikes first and then motorcycles gradually get to cars. But yes, it will be a very fucking big business. That's my expert opinion on the subject.
It's a very colorful parade out there with all those different bicycles.
I feel like I'm just getting started now. We should do more questions now.
Yeah. Okay. One more really good one. Okay. If there aren't any, then let's give Dave a round of applause.
All right.